Hello and welcome to our webinar today, Bolster Your Risk Management Strategy with Cyber Insurance. We will help you to gain more insights and understanding of the possible damages from cyber attacks and how to choose the best strategy for you in order to make sure that you will receive payout if you experience such an event. Let's get started. Contents we will cover today are: what is cyber liability insurance? Why do businesses need cyber liability insurance? Who needs cyber liability insurance? What type of data does cyber liability insurance protect? What cyber liability insurance typically covers and what typically excludes? How to increase the likelihood of a payment? How an IT service provider can help you qualify. How an IT service provider can get you paid. Although adopting the latest technologies and industry trends is undoubtedly crucial, it is equally important to understand that your business has the best cyber liability insurance. Think of it as an invisible shield protecting your business from devastating losses. Let's see who needs CLI. Businesses handling sensitive data, businesses with specific standards for customer confidentiality, comparatively smaller businesses. What type of data does CLI protect? It protects customer data, employee data, financial data, and intellectual data. What CLA typically covers: data breach response costs, data recovery costs, legal fees and expenses, costs related to ransomware and cyber extortion response, regulatory fines and penalties, business interruption costs, public relations, and reputation management. What CLI typically excludes: intellectual property infringement, prior knowledge of pre-existing conditions, known vulnerabilities, lack of security measures. Now let's see the key considerations when selecting the right cyber insurance coverage. In order to harness its full potential and ensure robust protection, it is critical to have a nuanced understanding of it. Let's first understand the difference between first-party coverage and third-party coverage. Every business today needs cyber liability insurance. To help businesses quickly respond and recover from data breaches, insurance providers have developed two types of cyber liability insurance: first-party coverage and third-party coverage. Here is how they differ. Focus on coverage. First-party coverage shields the insurance business, protect against direct losses and expenses resulting from a data breach. Third-party coverage focuses on liabilities from third parties, covers claims made by third parties who suffered losses because of the insured business cyber incident. Cost covered. First-party coverage covers only the insured's direct costs, pays for the revenue loss, forcing investigations, data restoration, public relations, and customer notification services. Third-party coverage pays for businesses' legal expenses, covers cyber-related liabilities such as data breaches, privacy violations, and defamation. Reputation management
First-party coverage pays for expenses related to hiring public relations firms, aims to restore the brand image of a business after a cyber incident. Third-party coverage primarily focused on handling the legal aspects, more concerned with defending against claims and settling third-party disputes. Beneficiaries of the coverage. First-party coverage directly benefits the insurer, provides direct protection to the insured party against direct losses. Third-party coverage benefits third parties, such as businesses, customers, clients, and business partners. Provides direct protection to those affected by the data breach suffered by the insured business. Now, when we know the nuances, let's see the key points to consider when shopping for cyber liability insurance policy. The first one, coverage. Comprehensive coverage is key to reducing the impact of a cyber incident. Your business can become the victim of data breach or a large-scale cyber attack at any time. That's why it is crucial to ensure that the policy addresses cyber risks specific to your business. The second one are the limits. Evaluate the policy to understand the coverage limits. The policy that you finalize should be able to handle the potential costs associated with a cyber attack, including legal fees, data recovery, and business interruption expenses. The third one is exclusions. Study the policy outlines to understand what is excluded. Any limitations in your policy can make your business vulnerable. That's why it's crucial to know what is not covered by your insurance. The fourth one, incident response. Make sure that the policy has provisions for developing and implementing a cyber incident response plan tailored to suit your business. Without a well-defined response plan, you won't be able to effectively respond to a cyber incident. And the next one is the price. Before finalizing a policy, compare and cross-check various policies, especially their costs and unique offerings. Although opting for the most affordable option can be tempting, it is crucial to ensure that the coverage you choose is best suited for your business needs. And the last one is reputation. It is also important to do your due diligence and research the insurance company's reputation. Look for an insurer with a good reputation and positive customer feedback. Choose a company that settles claims promptly, as this is a reliable indicator of the levels of support you can expect to receive when you need it. How to increase the likelihood of payment? We have key points which we have to cover. Understand your policy coverage. Delve into the nuances of your policy. Scrutinize terms, conditions, and coverage limits. Identify inclusions and exclusions aligns your expectations effectively, empowering you to grasp the extent of protection offered. Complete the application accurately. Accuracy is paramount when applying for cyber insurance. Detailed and precise information regarding your organization's cybersecurity measures, risk management practices, and past incidents of breaches aids insurers in evaluating your risk profile accurately. The next one is maintaining documentation of security control. Maintaining comprehensive records of cybersecurity measures, policies, procedures, and incident responses becomes crucial evidence during the claims process. These records showcase proactive steps taken to mitigate cyber risks. This could affect also the price of the policy, as you know, for the most of the insurance policies, the price go up when the risk is higher, and the price is lower when the risk is lower. The next one is timely incident reporting. Immediate reporting of cyber incident or potential claims to your insurer as per policy requirements is essential. Swift notification initiates the claims early, allowing for a prompt investigation, a critical aspect of successful claims process. The next one is detailed loss documentation. Comprehensive documentation and quantification of financial losses incurred due to cyber incident are vital, including costs related to business interruption, data restoration, legal fees, and other expenses supports your claim accuracy. Cooperation with insurers investigation. Full cooperation with the insurer's investigation, providing requested information, interviews, and access to systems and records is imperative. Failure of cooperation might lead to claim delays or denials. The next one is regular policy review. Consistent review of your cyber insurance policies is crucial. Align with the evolving business needs and changing cyber risk landscapes. These steps allows necessary adjustments to coverage, endorsements, or additional coverage when needed to match your risk profile. Next one is enhancing cyber security practices. Continuously improve cybersecurity measures based on industry standards. Regular assessments of identify and mitigate vulnerabilities showcase a proactive approach, potentially influencing positive claim outcomes. And the last one is expert consultation. Seeking guidance from insurance professionals, legal counsel, and specialized IT service providers offer invaluable insights. Their advice aids in optimizing coverage and effectively navigating the claim process. But even with comprehensive cyber coverage, your claim could still get denied. Let's see the top factors that could lead to your claims getting denied. Something that you definitely don't want to happen. The first one is poor prevention practices. The next one is third-party or contractor fault, accidental errors or omissions, failure to document preventative measures, and the last one, coverage doesn't extend beyond interruption timeframe. Now let's see how an IT service provider can help you qualify. It can help you with documentation and reporting, with the security assessments, with the incident response planning, risk management and mitigation, and with compliance assistance. But how an IT service provider can get you paid? At the first place are the robust cybersecurity measures. The next one is the cyber risk assessment and mitigation, incident response planning, and documentation and reporting. As we saw that cybersecurity insurance is an important part of your risk management, let's see how much does the cyber insurance cost. The cost of cyber liability insurance depends on your policy limits and how much sensitive data your company handles. Small businesses pay out $145 per month for such policy. According to Insureo, a platform for cybersecurity insurance, small businesses pay an average premium of this amount $145 per month, or about $1,740 annually. According to their platform, 38% pay less than $100 per month and 33% pay between $100 and $200 per month. Let's see the cost factors for the cyber liability insurance. The first one is your policy limits and deductible. Cyber threats in your industry, type of cyber insurance purchases, amount of sensitive information handled, number of employees, and history of insurance claims. How does your industry impact the cost of cyber liability insurance? Most businesses only need first-part cyber liability insurance, also called data breach insurance, in order to defend against cyber risks at their own business. The cost depends on how much customer information they handle, such as credit card numbers or social security numbers. Cybersecurity companies, network security companies, IT consultants, and other businesses that are responsible for their client cybersecurity can expect to pay more for cyber insurance coverage. They usually need third-party coverage, which pays for the legal costs if a client blames their business for failing to prevent a cyber incident. The monthly cyber insurance cost by industry are as follows. For finance and accounting is $56, retail $64, insurance professionals $71, healthcare professional $75, building design $82, consulting $92, media and advertising $110, non-profits $124, professional services $124 as well, IT technology $149. Let's see how you can save money on cyber liability insurance. Cyber liability insurance costs vary based on several factors. In addition to choosing lower coverage limits, These tips can help keep costs down, but also you should keep in mind that if the coverage is lower, then the covered costs will be less and some of them won't be included. So you really want to make sure that the specific of your business are and the risks for your business are covered from your insurance. The first one is bundle your insurance policies. Businesses can often save money by bundling policies purchased from the same insurance provider. For example, tech companies often choose to buy technology errors or omissions insurances, also called Tech EO. This policy bundles errors and omissions insurance with cyber liability insurance to protect against lawsuits related to mistakes, including failure to prevent a data breach or a client system. The second one is pay the annual premium upfront. You can usually choose to pay your cyber liability insurance premium in monthly or annual installments. While it's tempting to go with monthly payments because they require less cash upfront, many insurance companies offer businesses a discount for paying the entire annual premium at once. The next one is manage your cyber liability risks. If your small business has no cyber liability claims history, you could save money on your premium. You can also save money by implementing security measures at your business. For example, you might routinely change your business account passwords, invest in secure equipment and software, take employees to recognize and avoid malware and phishing attempts. Implement multi-factor authentication for employees. How much can a cyber attack cost you? Let's see. According to Net Diligence Cyber Claims Study, the report is from 2023. For the last 5 years, for the small companies, the average incident cost is over and around $160K, and the average payout is around $130K. So it's really important to have insurance in place in order to recover most of your costs related to a possible attack.
Thank you for joining us today. I hope you find this webinar helpful and useful for you. Join us next month for more interesting cybersecurity topics. If you need further details or consultation, you can book one on is-bg.online. Have a great day.